Hi, welcome to the market update from 29th February to 2nd February 2024. Bank of England in its regular policy meeting has left the rate unchanged at 5.25%, which is the highest level since last 16 years. Bank of England Governor Andrew Bailey said that there is a need to see more evidence that the inflation is set to fall to their target of 2% and stay there before they can lower their interest rate. Currently, the UK annual inflation stands at 4%. The US Treasury 10-year bond yield is currently trading at 4% right now. If we look at how the global markets have performed, the US market was up by 3 to 7%. The European market was flat, ranging between negative to 1%. In the Asian market, the Indian market, the Japanese market and the Taiwan market was the only markets that ended in positive. The rest of the markets was negative, with China falling the most at 7%. India released its interim budget. The interim budget assumed that the nominal GDP would grow at a rate of 10.5%. The capital expenditure was also increased from 11.1%, which was 10 lakh crores in the last year, to 11 lakh crores in this budget. The fiscal deficit target was also revised to 5.1% of GDP, with lowering market borrowing, which gave a cheer to the bond market. The budget focused on infra development, manufacturing PLI schemes, agriculture, green energy and railways. The defense capital budget was also increased by 9.4% to 1.72 trillion. The government announced a subsidy for rooftop solar panels, which would help creating 300 units of free electricity per month to 1 crore households. Under the PM Gramin Awas Yojana scheme, another 2 crore houses would be built in next 5 years. Government also announced free cervical cancer vaccine for girls between the age of 9 to 14 years. If we look at the oil prices, the oil traded at $77.67 a barrel, which is lowered from $80 from the last week. The gold prices had increased by 1.8%, currently trading at 62,080 per 10 grams. If we look at for the week, the FIS sold 2,000 crore worth of Indian equity and DIS bought 10,100 crore worth of Indian equities. On monthly basis, January month was the worst hit, with FIS selling close to 35,900 crore worth of equities. After March, January became the highest equity buying month for DIS, with close to 26,743 crores. So, looking at the monthly performance of the market, backed by the FIS selling, the Sensex and Nifty closed down. Sensex was down by 0.72%, Nifty was down by 0.07%. Nifty Bank was worst hit with 4.75% correction. Nifty Mid Cap was up by 4%, and Nifty Small Cap was up by 7.49% for this month. If we look at the weekly performances, Sensex was up, backed by the high buying in the last week, by 1.96%. Nifty 50 was up by 2.35%. Nifty Bank was also up by 2.46%. Nifty Mid Cap was up by 2.64%. Nifty Small Cap was up by 5.6%, giving the highest return. Now we look at how are the valuations. If we look at the Nifty 50 trailing PE, it has reached 22.5, which is well above 5 years and 2 years average. Nifty Mid Cap 150 trailing is at 27.5, which is the highest in 2 and 5 years. The Nifty Small Cap 100 trailing PE is at 29.8, which is close to 2 years high and just above 5 years average. If we move to the Indian bonds, the Indian 10-year government bonds is currently trading at 7.05% yield. If we look at the yield curves, the short-term and the mid-term maturities in the yield curve have inverted, which shows a sense of trouble in the short-term and the midterm. The long-term yield curve still remains flat. So this is from my side for the weekly update. Do not forget to like, share, and subscribe for more weekly updates.